Another day, another poor time in the exchange for cryptocurrencies. Ever since the crypto market took a hit earlier this year, things have been consistently declining for almost all cryptocurrencies. This month, the company making the headlines is crypto exchange FTX. Rumors are spreading about the company's solvency, and as speculation mounts as to SOL token's connection to the company, it too is suffering. We'll be covering all of that in today's video. First up, FTX CEO denies insolvency rumors. During the first weekend of November, things were getting pretty rough for Sam Bankman-Fried's FTX crypto exchange. There was a story published by CoinDesk that revealed details about the company's balance sheet, and it led the CEO of one of the largest crypto exchange platforms, Binance, to reconsider his position regarding holdings of FTX's crypto token, FTT. The CEO, named Changpeng Zhao, said that after the revelations of the CoinDesk story, he'd be liquidating any remaining FTT tokens that are currently on Binance's platform. That statement drew considerable speculation about the solvency of FTX, but Bankman-Fried tried to address those rumors head-on as soon as he could, sending out a tweet saying that FTX is fine and all their assets were fine as well. He went on to reassure investors that the company was more than capable of covering all client holdings. According to the FTX CEO, the company doesn't invest in client assets, even in treasuries. He concluded by saying that FTX has been processing all withdrawals of the FTT token and will continue to do so. The reason why Zhao got so riled up is because it seemed FTX's sister company, Alameda Research, was tied closely to FTX itself, which we'll cover later. CEO of Alameda, Caroline Ellison, quickly fired back, saying Alameda would purchase any amount of FTT tokens Binance wished to unload at around market price during that time. Zhao wasted no time in turning down that offer though, saying Binance would stay in the free market. Next, let's talk about the CoinDesk review. So, what exactly caused all this trouble with FTX and their token in the first place? Well, it's got a lot to do with the fact that Bankman-Fried's crypto empire is broken up into two separate companies, FTX and Alameda Research. FTX serves as his exchange, while Alameda Research is his trading firm. The problem is that according to CoinDesk, despite being two separate companies, the division isn't very stark when it comes to Alameda's balance sheet. What CoinDesk found was that Alameda's balance sheet largely consists of FTX, or specifically the FTT token. Holders of FTT tokens are given discounts on the exchange's trading fees. There's nothing particularly unethical or illegal about that fact, but it does show that Alameda is propped up on a foundation of a coin that a sister company invented, rather than a fiat currency or other cryptocurrency. The situation has provided evidence to speculators about the potential conflict of interest between the two organizations. Apart from the connection between the two companies, the Financial Review has also confirmed what industry watchers have suspected for a while now, that Alameda is a huge player in the crypto market at the moment. As of June 30th, the company's assets totaled about $14.6 billion. But what was of particular concern was the fact that the single biggest asset on the balance sheet was a holding of unlocked FTT tokens that amounted to around $3.7 billion. And then, the third largest entry on the asset side of the bookkeeping was a pile of collateral FTT that was worth $2.16 billion. Let's talk more about Alameda's assets. Besides the collateral FTT tokens and unlocked FTT, there are more FTX tokens present among its $8 billion worth of liabilities. Those liabilities are primarily dominated by loans, with them accounting for $7.4 billion of the $8. About $292 million of those liabilities are accounted for by locked FTT tokens. Corey Klippsten, the CEO of the investment platform Swan Bitcoin, spoke out about the new information regarding Alameda. He said that it was interesting to see that most of the net equity of Alameda was FTX's centrally controlled, essentially unlimited FTT token. Klippsten has always been critical about altcoins, which are cryptocurrencies that aren't Bitcoin, so it's no surprise that he's taken such a strong stance against FTX here. Ellison refused to comment when the news first broke out, and FTX didn't respond to a request for comment either at the time. It seems that they were aware of how things might have looked from the review of the balance sheet. Other assets that were logged into the balance sheet included $3.73 billion of crypto held and large amounts of the Solana blockchain's native token, SOL. Specifically, there was around $292 million worth of unlocked SOL, $863 million worth of locked SOL, and SOL collateral that amounted to $41 million. That's a large amount of SOL present in the balance sheet's track, since Bankman-Fried was an early investor in Solana. Other tokens mentioned by name include SRM, MAPS, OXY, and FIDA. Coming up, how this affected SOL. SOL was hit particularly hard over the first weekend of November, even as other cryptocurrencies suffered decreases in value. They were down 6% over the course of 24 hours hours as a result of the drama going on with FTX. Because of the amount of SOL assets present on the balance sheet reviewed by CoinDesk, many speculators think that they might be too hot to handle right now. One theory that's making its rounds at the moment is that Alameda might try to unload its SOL tokens in an effort to raise fresh liquidity. That expectation of massive unloading of tokens has caused investors to flinch in holding the tokens themselves, and in a bid to get ahead of the potential drop in price, they've started to unload tokens themselves. That's what's caused such a steep drop in the price of SOL over the weekend. Moving on, the performances of Bitcoin and Ether. Apart from these huge altcoins that are suffering as a result of the Alameda controversy, Bitcoin and Ether are still in the spotlight. Bitcoin and Ether are the two largest cryptocurrencies by market capitalization, and in contrast to the troubling decline of SOL, they've had a fairly quiet day. Though Bitcoin has dipped dramatically over the past year or so, they've been slowly stabilizing. Over the course of the same 24 hours as SOL's 6% dip, Bitcoin only suffered a 2% decrease in value. Bitcoin was sitting comfortably over its most recent $20,000 support level after jumping over $21,000 in the week prior. That jump was the result of investors speculating that the U.S. Federal Reserve would scale back its current diet of large 75 basis point interest hikes. That, of course, didn't come to pass, but Bitcoin's remained steady enough since that expectation initially caused the price to spike up. Ether performed pretty well on that day also, only falling by 1% throughout. Now for the remaining market wrap. Cryptocurrency isn't traded in a vacuum. It's subject to a lot of external pressures, including traditional currency markets. It's fortunate for investors then that the market was trading roughly flat that day. The way that was measured was using the CoinDesk Market Index, which is a broad-based index that measures the market capitalization weighted performance of the digital asset market. Prior to the U.S. midterm elections, the stock market began on a pretty good note, with tech-heavy exchanges like Nasdaq and S&P 500 going up by nearly 1 percentage point. Apart from those, the Dow Jones Industrial Average closed up at around 1.3%. When it comes to traditional commodities, safe haven gold also managed to end the week with a positive difference in its value, but that difference was just around 0.1%. Brent crude oil, on the other hand, barely kept its previously held position from last week, staying just above $98. Brent crude oil is widely seen as a measure of how well the energy market is doing, so this too contributed a lot to how the crypto market was doing this week. Lastly, regulations and FTX. The problem with the Alameda and FTX connection isn't really about the fact that the two might be closely intertwined with the use of FTT tokens. The problem is really the fact that there aren't that many regulatory guardrails in place to ensure that there's transparency when it comes to how the two operate together. A traditional market is much more regulated, and conflicts of interest are rarely a problem. If they are, they're quickly rooted out. Most crypto platforms like FTX aren't registered with the U.S. Securities and Exchange Commission or SEC. Registering with the SEC comes with additional oversight from watchdogs, and those companies are generally pushed to disclose important information about finances and protocols that make it easier to regulate their behavior and safeguard the market. According to Bankman-Fried, the fact that FTX has such a wide global reach means that it's among the most regulated exchanges in the world. On top of being registered with multiple U.S. federal agencies, they are also authorized by authorities in countries like Japan, Dubai, and Switzerland. That's a wrap for this video. Do you think that investors should be concerned about the financial links between FTX and Alameda? Let us know in the comments below. Make sure to give this video a thumbs up and subscribe to our channel for more videos like this. See you at the next one.